Let's talk a little bit about too good to be true, really low builder interest rates. Now, you've probably seen advertised all over Facebook, or if you're doing any searching for home buying, where you see these crazy low interest rates advertised by builders, and you're kind of thinking to yourself, man, like, is that too good to be true? Is that a scam? And, they're usually 2-3% lower than what you're seeing everywhere else. And so now you're wondering, like, is this a scam? Is there something wrong? Is my other mortgage person just trying to overcharge me? Like, what's going on there? So let's talk a little bit for a second about how builder interest rates work and why they are often so low. So builders are sitting right now on a lot of homes that they do need to sell. And every day that the house is unsold, understand that the builder is paying what's called holding cost. And if you're not familiar with what holding cost is, let's talk a little bit about holding cost. So holding cost is things like interest, taxes. They're probably paying for electricity. They're paying for insurance, any kind of maintenance that the house has, right? So all of these things that builder is actually paying on to hold these houses. And so they don't want to lower the price of the home because that is going to negatively affect their entire community. It's going to create kind of a ripple in low appraisals. It's going to devalue what they have. And so they don't want to do that because it can definitely mess up a lot of things for them that can have a bigger ripple effect than what they do next. Which instead of doing that, where they drop the actual price tag, they offer something like a rate buy down. So this is, again, where the builder is actually coming in and they are buying a lower interest rate for the buyer so that it can attract them to come on in and grab that home. Usually the only way that they're doing this buy down is through their preferred lender. Okay. To give you some context, most builders own the builder, the lender, and the title company. In my mind, it should be a little bit illegal that they own all of these different entities. However, in current state, it is not illegal. They are able to own all of them. But you have to think a little bit about who the builder lender, whose best interest do they have in mind? Is it yours or is it the builder? And so often I have people that are like, well, the builder lender. And we actually had a deal one time where if they had gone with the builder lender, they actually would have lost the house because it was an opposite market into what's happening right now. They could sell houses at the drop of a hat and the guy ended up losing his job and the builder lender would have just cut that guy loose immediately. We were able to find out that he had a new job, move very quickly, delay the closing by only a few days. So we had to pay a couple of days extra to the builder for delaying that closing. And we were able to get it done. But that's because we had the buyer's best interest at heart, not the builder's. And so that is a very important distinction when you're looking at dealing with a builder lender versus your own independent mortgage company you have chosen.
Stay tuned. We'll be back right after this message from our sponsors.
Welcome to Financial Mastery Simplified, your go-to podcast for making smart money decisions. We break down complex financial topics into easy-to-understand advice you can use every day. Our experts cover everything from budgeting and saving to investing and retirement planning. We give you the tools to take control of your money and build the future you want. With Financial Mastery Simplified, you'll feel informed and empowered to make the best choices for your financial health. Tune in to Financial Mastery Simplified on your favorite podcast platform. Start your journey to financial confidence today.
Visit us at fms.tips and fms.college for more information.
Welcome to House U, where we believe in the power of education. At House U, we're more than just a brand. We're your partner in home ownership, dedicated to educating, equipping, and empowering you every step of the way. Education is at the heart of everything we do. We offer comprehensive resources designed to make home ownership simple and accessible for all. From understanding mortgage options to mastering home maintenance, House U provides the knowledge you need to make informed decisions with confidence. We host workshops and seminars, bringing together experts and community members to share insights and build a stronger, more informed community. Because when you're educated, you're empowered. House U, home ownership made simple for all. Visit our website or contact us today to start your journey with HouseU. Empower yourself with knowledge and embrace the joy of home ownership.
Thanks for your patience. Now back to our conversation.
It's important to note that depending on the price of the home and then the amount of the buy down, it can actually be a substantial amount of money, $20,000, $40,000. And so do you really think that they're just going to eat that cost out of the goodness of their heart? No. Builders, no different than any other business owner, they're in business to make money. They're in business to make sure that they're making good financial choices for their entity. And so they build that expense into the deal somehow. And usually it's by keeping the base price of that house high and then getting them to use their lender and going ahead and buying it down because, again, that is also feeding them. So is this a bad thing? Because I don't want you to sit here and think that I'm bashing on builders. I don't necessarily have anything negative to say about builders. I think there is a lot of really excellent, really reputable builders. So it's not necessarily a bad thing, but you have to understand what the trade-offs here are, right? So you might be paying more for the home than it's actually worth. The base price didn't come down. It just feels more affordable because of that now lower interest rate. And sometimes that interest rate lowering isn't even a permit lowering. It is a temporary buy down. Temporary buy down means that they bought it down for a period of time, 1 year, 2 years, 3 years, and then it's actually going to pop right back up to whatever the market was bearing anyway. You might be limited to only their preferred lender. And that means that you are not able to shop at all and make sure that you're making the best long-term choice and picking the best expert for your needs. And so that can potentially be a negative trade-off. Another potential problem is that building equity is going to be slower, especially if the market is softening. You could find yourself upside down on value for quite a while. And so if you're going to be in a long-term hold on the house, it's not necessarily a bad thing, right? You're going to be there for a long time, then it may not make a difference to you. But if you end up in a situation where you're forced to sell because maybe you lose your job, you have to move to another state, something outside of your control, it can potentially negatively affect that. And just to let you know, right now, we've got about 60% of old builders and they're offering and throwing around incentives. And that's whether it is a rate buy down, a closing cost credit, free upgrades, things like this. Really big names, Lennar, Pulte, DR Horton, like all of these different builders are going ahead and doing these kinds of things. And why are they doing them? Because it works. Because you see the shiny object of the lower rate. And so, and you don't really ask a lot of questions. You don't really understand how it's going to potentially affect you long term. And so that's what you sign up for. Totally makes sense. Now, the unique thing and the thing that I want to make sure to point out to you when you're considering buying a new build is this. Sometimes buying a resale home or a new build without the incentives or asking them to give you those incentives to another lender or split them up, do something like this, can actually help and put you in a stronger equity position long term, especially if you're only planning on staying on that shorter window of time, like 3 to 5 years. So if you're looking at new construction and the builder is throwing out lots of shiny offers at you, make sure you sit down and you crunch the numbers, especially with somebody who isn't necessarily going to have the full interest of it, the transaction, like the builder and the builder's lender, and make sure that you're walking through the real cost. I will tell you, whenever we've encountered this situation with a client and we've had them come to us and say, hey, we really want to use you. This is what's being offered. What can we do? We basically have had them get us the paperwork. We've taken a look at it. We've gotten them to push back a little bit to see if the builder will allow some other things. And we will be honest with them. We will tell them our honest opinion if it makes more sense to go this way versus this way. And so anybody who is a true expert, who's in your corner, who cares about having your business for the long term and not just for that one loan, they will give you their honest opinion. And so that is a conversation you should be having with them, is asking those really important details. And so while that super low interest rate looks super sexy, which I totally understand, the math is what never lies. And so you definitely need to make sure that you understand and are making a fully aligned decision with what works for you and your financial needs. And if you're interested in understanding home buying more and on a deeper level, I encourage you to go ahead and grab a copy of my book. I'm going to give you a totally free copy. It's going to be in the notes. And you can definitely read a little bit more, understand. I give you tons of tips and tools, exactly how the mortgage process works, so that you can make sure that you are making a well-informed decision for you and your family.